Guys, there is something huge happening in the markets right now that absolutely nobody's talking about. This could be something that ends the bull market early for us. Don't get me wrong, I'm a crypto bull. I want to see it run too. But there's something huge that you need to be aware about to make sure that you don't get wrecked in this crypto market. Let's jump straight into it. I don't want to waste any time. So, first off, guys, let's have a look at the S&P 500 and Bitcoin next to one another. Now, I know there's a lot of people out there thinking, oh, this rate cut is going to make heaps more liquidity come into circulation. It's going to send Bitcoin to the moon. But there is a different reality that you also need to be aware of. So first off, looking at the S&P 500. Now, what we can see here is that there's a direct correlation to the S&P 500 as there is to Bitcoin. You can see that the bottom here on the S&P 500 also marked the bottom for Bitcoin, where we got a really nice run. We then found a top. Once again, a top on the S&P 500 has almost marked the top for the crypto chart. Now, I'm not going to go too deep into this, but you can go back and check all the data that you like and just check this for yourself. So back test it. Now, I know a lot of people are saying that this whole presidential election is also going to send Bitcoin to the moon. Just wait a second and just look at this. First off, here's a chart that shows that the S&P 500 does well following a Fed rate cut. That's what we're all led to believe, right? But wait, that's unless there is a recession. Okay, now what could be causing a recession? Some of you may have heard of the yield curve. Some of you may haven't have. I recommend that you go and check that out. I'm not going to go too deep into it tonight. I just want to show you guys the short, sweet information that you need to know. So first off, let's take a look at this chart here by Fred. It's a 10-year Treasury constant maturity minus the 2-year Treasury constant maturity. And this helps us to understand the yield curve. Now, how this all gets played into crypto. We're going to go into that in a second. Just a quick explanation about what this is. So first off, you can see that on this chart, during the time of May 1989, it flipped negative. It went below this this black line here, which marks the zero line. That means it went into negative yield curve. Once again, it happened here in the year 2000, again in the year 2006, and once again right now in the year of July 2023, and where we still are now, we've just crossed over that level right now. What's important is that you see these grey lines here. A grey line basically represents a shaded area, indicates US recessions, okay? And you can see a recession has happened almost 6 months after every time we have reclaimed that zero level on the yield curve. So it's happened here in 2007. May, we reclaimed the zero line. And then within a few months, coming into December, we hit recession. Same thing here in April 2001, we hit another recession. What are we looking at right now? We're about to cross over that zero line. Could we see a recession in 6 months as we have previously seen based off the 40 years data that we have on this chart? Now, let's just go back to the S&P 500 for a second. Now, what we can see, we already know now that the market is very closely correlated, okay? And everyone believes that coming into Q4, coming into October, it's usually the best time for the markets, and that's where markets tend to pump, right? But just wait 1 second. Look here. 2000, yes, we came into October, bang, markets rallied. 2016, we came into October, yes, markets rallied. Let's go back and have a look at what happened in 2008. We're coming into September, October, we saw a dump. If anything, we saw from the previous high a total dump of close to 60%. Let's go back here in 2001. Once again, we saw another dump, and if you go back to the top to the bottom, it's about 52%. That dump occurred coming into September, October. What is the difference between these two times versus what we saw in 2017 and 2020? Well, they were the times that we came into recession. 2000, and once again here 1990, and once again here in 2007. But the other two times, 2016, we didn't have a recession just yet. The yield curve didn't break below and then reclaim and start to go back up. So could this mean that we could be seeing another recession soon? Now, let's go deeper into this. So you can see that on each one of these peaks, where we've marked these lines here, the yellow lines basically mark when we have the October pump. You can see that right here, this was making higher highs, whilst the indicator was making lower lows on the weekly. That's a bearish divergence. Same thing here with what happened in 2007, 2008. We were making higher highs, and then we saw bearish divergence. We went back down. In these two times where we weren't seeing the yield curve previously inverted, what we saw is a sideways consolidation or a megaphone pattern, which is what I like to call this pattern that we had here before we saw the breakout. What are we seeing right now though? Right now we are also seeing on the weekly time frame higher highs being put in with bearish divergence. Doesn't this seem a lot like what we saw at this time here in 2007 and also again in 2000 to 2001? It looks extremely similar. Now, given the fact that we know that the S&P 500 and Bitcoin has a very close correlation, if we saw close to 50% dump each time here when we got the inverted yield curve, what could we think may happen? Now, I'm just talking about predictive analysis here. What we could see is if this comes down 50%, we already know that last time we saw the S&P 500 drop 25%, it actually caused Bitcoin to come down from 69,000 all the way down to 15. If we were to see a 50% drop here on the S&P 500, what could happen? You have to ask yourself the question, what could happen to Bitcoin this time round? Remember that Bitcoin is still seen as a risk asset, not yet as a store of value. So it's still traded as a risk asset. What is one of the main risk assets? It's the S&P 500. It's like the stocks, US stocks that are in the S&P 500. They're looked at as risk assets. So when institutions and investors all turn off and say, it's risk off season, I don't want to be including risk coins in my portfolio, and they start to sell those risk related tokens or coins, whatever they may be holding, or stocks, what we could see is that then also gets correlated to Bitcoin. We could see the pullback. But not only was this a time where we're having the yield inversion come back above that zero line, but it was actually the longest inversion in the bond market in history. This time when we came below that zero line, it's held there for a very significant level of time, which hasn't happened before. So, guys, be aware of this. Smash the like button, make sure you subscribe and send this to more people. I'm going to be putting out content like this weekly to keep you guys up to date. But if you did get some value, please make sure you at least give me a like so I can help get this video out to more people and to motivate me to make more videos just for you. Keep this in mind, because if this does pull back and it is risk off season, we could see price come down further. And I'm a Bitcoin bull myself. I'd rather see the price of Bitcoin go up, but I need to trade what the data is telling me, and there's 40 years of data here. Now, this is not financial advice. You guys go and make your own decisions. I'm just showing you what I'm looking at. And guys, I hope you got some value from this. I'll see you on the next video. Bye for now.